Markets across Asia today, we are higher, although no one hitting a 1% gain yet. As you can see, we've got green arrows across the screen, following on from a similar performance from Wall Street. Malaysian conglomerate Sime Darby reported better than expected quarterly profits, saying it is on track to exceed its full-year profit target by 20%. Nirgunan Tiruchelvam is equities analyst at RBS, and he is joining me here on the set in Singapore. So the numbers from Sime Darby better than expected, but still down 41% when you compare it to the same period a year ago. Should investors be looking at the glass being half empty or half full?
Well, the question you need to answer is, what direction do you have for palm oil prices? Palm oil prices have fallen. They're 50% of the level that it was a year ago. So that is reflected in the company's top line. But looking to the future, we see palm oil prices moving upwards. There's a shortage in palm oil that expected because of very strong demand in China and India, as well as some supply problems.
So does that mean investors should be buying Sime Darby stock?
Yes. We have a buy on the stock with about 13% upside.
Some analysts have been saying that Sime Darby needs a big overhaul, including possibly listing its plantations business and selling some of its underperforming units, like its motor business, for example. Would you agree with that? They've been resisting.
Yes, there has been some speculation about a spin-off either of the plantation business or of the underperforming non-core businesses. But in yesterday's briefing, the management downplayed any spin-off opportunities.
And why are they resisting?
I think they want to keep it under the same umbrella. It's a state-controlled entity. It's the product of a merger of three medium-sized plantation companies, and perhaps they see the benefits of scale and also some benefits from the conglomerate structure.
It's just a matter of time, though, Nirgunan, before an IPO of the plantation business happens. I mean, it is the jewel in the crown of the group, isn't it?
It doesn't seem likely at this moment, because what would prompt an IPO would be the need for cash from the Malaysian government's perspective. And they don't seem to be in any great urge to privatize one of the largest state-controlled companies in Malaysia.
How are they in terms of efficiency? What kind of a score would you give them?
They actually lag behind the privately controlled companies like IOI and KLK on their productivity. So there are some productivity gains to be made from the merger of the three medium-sized plantation companies.
Okay, so how does this play out when it comes to with the company? They're tripling their capital expenditure plans. Why don't we talk a little bit about that and what they're hoping to accomplish?
The capital expenditure is devoted towards improving the planted hectareage. If that happens, there may be some productivity improvements. As I said, the productivity is less than IOI and KLK, and perhaps with these moves, they would close the gap.
Malaysia protects its position as the #1 exporter of crude palm oil. They're very protective over this. Is Indonesia close to overtaking them?
Actually, in recent years, Indonesia has now overhauled Malaysia as the #1 palm oil producer. So that's been the major change in the industry over the last few years, with Indonesia being the largest producer.
Nirgunan, how has Sime Darby done in terms of keeping its costs down? Clearly, that belt tightening across the commodities sector has been a big theme of this a response to the economic downturn. Has it run its course as far as restructuring is concerned, cost cutting, or is there still areas in the business where they can identify more cuts?
Cost-cutting is not such an easy task in this industry. The major costs are labor and fertilizer, and both things are not easy to control in a large plantation setting.
Well, thank you very much for your time today. Good to have you on the show. That was Nirgunan Tiruchelvam, equities analyst at RBS, and he was talking about Sime Darby, which, by the way, he rates as a buy.